So today is an open webinar, so we'll spend time focused on, trading and analysis. And I think what we'll do today, and it's totally up to you, is we'll just cover, kind of any and all markets. We don't just have to focus on the Forex markets. But we'll certainly take a look. I thought maybe we'd start with the NASDAQ because it's actually hitting a level. So each morning, just want to share with you, if you look at your screen, you see kind of the supply and demand grid that you see here. We produce this every day. There's 20 major markets, 6 supply demand levels in each market. Put this together, every morning for the trading day, just to help people understand, where banks are buying and selling, so we can buy and sell there too. This morning had a nice level in the NASDAQ. I'll share that with you here, and it actually is kind of meeting entry again. Get rid of this blue line here. Anyway, there's the level itself, and the reason I'm bringing it up now is because it's actually up in that area again. Here we go. Okay, so watch for that. If you trade the NASDAQ futures, maybe another opportunity here. You're kind of hitting this level for the second time, but the first time we just touched it and fell, so this second time should be okay also. But we'll see. Obviously, ideally, if you can get your stop above this stuff over here to the left, that helps, especially since it's the second time up in this area. Okay, any questions on that one? The nice thing is there's really no significant demand until you get down below 44.10. So that's a massive profit zone. The whole key is to just get short in a place that allows you to really manage the risk. All right, and again, I assume the sound and everything is okay. Okay. Great. Good. So we'll come back to that one a little bit. Let's move on. The other thing I wanted to share with you is let's go from the NASDAQ right over to the S&P, which is pretty much the same market. Chart should need to catch up here a little. There we go. So if you take a look at the chart here, we're right up into this 2093, area. Now it does go up to about 2100, so watch for that. Main thing here is probably not where you want to be buying. If anything, we'd wait for a pullback and potentially look for a short position on a smaller time frame. Okay. Not a whole lot there. The NASDAQ is kind of the play there. If you're, if you're looking for that again. Yeah, ideally you enter, because it's a second pullback in that NASDAQ, you enter a little bit above that area. You've got the 2 other supply levels sitting just above. All right, the play is to lean against, I'll just go back there. Okay, so again, the play is to lean against these guys over here. All right. This is the area where we would expect price to turn. I like it too because there's probably some buy stops sitting up here. Remember, the goal is to buy the sell stops and sell the buy stops. And I think you'll have a nice opportunity to to do that up here. So you can almost cut this right in the middle. Right? I'm actually probably going to short that here on, just give me a second. Other Computer. Just a touch higher though. Okay, here we go. So again, right now that's a pretty big stop, but you know, if it pushes a little bit higher, there's a nice opportunity, but the stop would probably have to be around 44.68. There we go. Okay. Not yet. I'm going to wait for it to push just a little bit higher, get closer to the 60. I was just doing that over there. Sorry about that. All right, so I can look at any market you want to take a look at. I've got some other ones set up for you, so. Gonna pull up, let's take a look at gold. Here it is. I thought we had some levels in gold already. No, we need gold to drop a little bit more. So one of the things we don't talk about all that much or enough is, you know, well, let me point it out here. So this is pretty important. When it comes to, well, for example, right now. So, you know, you might look at this and say, hey, we have a level right here, and we have a couple levels, you know, right down here, right? Well, which one do you take? To me, clearly these levels down here are the stronger ones, and it's because of what is directly to the left. Remember, ultimately, all we're looking for in any market, whether we're a short-term trader, long-term trader, whatever, longer-term investor, doesn't matter. The only thing that causes prices to turn is, you know, a supply and demand imbalance. When you get to a price point and your number of sellers, the amount of sellers goes to zero, and you have you know, buy orders left, that's going to cause a turn in price. You know, what we work on is the picture that represents the biggest supply demand imbalance, which is where banks and institutions are buying, right? What causes prices to then move is a lack of a supply demand imbalance, right? I mean, it's moving because you have a supply demand imbalance at each price level, but not the big significant one, right? So there's just not a lot of orders in an area to stop price from moving in one direction or the other. So when we take a look, if you look at this level up here, and you look just to the left of it, you see how the price just kind of dropped. There was no supply in there, which means price was basing here. Well, it may look like a good demand level. This would never qualify because it didn't take much to create that. In other words, you didn't have a lot of supply over here. So that tells me that, well, there's obviously some demand down here, but not much, right? It didn't take too much, that there wasn't anything here to stop it. There weren't a lot of sell orders that we had to work through and fill, and then more buy orders to cause price to go higher. But if you look to the left of these two levels that are sitting on top of each other here, notice all the supply you had to get through first. In other words, in you know, just real terms, all the sell orders here that had to be filled before price could go higher here. Do you see the clear difference? That's why this is a level, assuming all other odds enhancers are here, that I would take, and this is the level that we would never take. Okay, Eugene, good. Yeah, it's subtle, but it's a pretty big deal. So. Okay, yeah. So there you go. And I can scrunch this up a little bit so you can see it a little. So there you get again, you can see the clear difference in the two. Well, it's just telling us, you know what? There's a lot of demand here because not only was price able to stay here at this area, but we're able to fill all those orders, and then there was even more demand left over to get price to go higher. All right. Okay, so that's subtle, but that's it is a big deal. This demand zone comes in about 1180 and a half. So your stop would put your stop about a point below that. And it looks like you have a pretty solid 2-to-1 offer to you here. On this level up here is not bad either. And of course, with gold, the bigger picture view is still very bearish. I know we've been saying this for like 3 years now, but nothing's changed. We still have not reached our fresh demand target below of about $1,000 an ounce in gold. So the plan is to just keep shorting rallies. Okay, again, I can go to any market you like. Just let me know. Otherwise, I can just keep going through my list. Dollar Canadian spot, no problem. Let's go there. Oh, nice big picture area. Obviously, we're a little late to the party, but we can look for a re-entry. Mike, I would say anything with volume, right? Anything that meets your minimum volume requirements should be good. There's not like one that's a favorite. So here's just a classic example of a larger time frame, just picture perfect setup. Right in here, there's your drop, rally-based drop, and your level coming out of that. Big drop, then a retracement. Now it's falling. And if you look at this time frame, you really don't have any demand until you get down to here. Okay, so plenty of room down there. So our next step would be to go to a smaller time frame and look for an area in the chart to, get back in this. We don't have to go too small. That's in a weekly chart. If you look at the 4-hour here, just a really good area. And again, here's that concept. Look at this supply zone, which looks great, right? We scored it out with our odds enhancers. Nice, strong drop away from the level. Very little time spent at the level. And then, all the other odds enhancers are pretty good there. But look to the left. You had to get through a couple demand zones here, and it did that. Not with ease, but didn't have too hard of a time to do that. Also, when you have the problem with these two demand zones is they're way too high on the curve. These two are sitting right at or under this larger time frame supply. This is a great example. So because of that, that makes this 123.30 area that much more significant, key. So there you go. So you have 123.37 right there. And that looks great. And that looks really good. Where's our nearest opposing demand zone? Well, we've got this area down here, but price really doesn't rally. Price really rallies from down here, right? You see that? If we go inside this level, you're not going to really, this isn't going to pan out to be much demand at all. So let's go a little bit lower. Let's put this time frame right there. And then let's bring this one up to let's do this. We don't need all this data. Let's open this up. There we go. Chat window. Okay, so there's our shorting opportunity up there. And if we get there, you know, the demand we'd be looking at, you see what I mean? When you look inside that level here, it's not a demand zone at all. And you can tell that by looking over here. But if you come down to the 120.50, you know, there's probably some demand that would qualify for very nice demand. So that'd be right there. So if we go up just a little bit above that, that's a pretty massive target. So this is a larger time frame play, but I love these. Okay, any questions on that one? Nice find there, though. Whoever want to look at the dollar Canadian, that was a good one. All right, Eugene, yeah, nice. Next market. Again, I can certainly go through my list, but if you have some that you really want to go over, we can do that. Okay, good. So let's see what we have here with the pound. As soon as the charts catch up. There we go. So, you know, we've been kind of looking at the pound. Obviously, this came off that larger time frame supply. We're pretty deep into it. We've got a great level sitting just above, but now, you know, price is down here. So that's what we have to deal with. So let's see on a smaller time frame what we have here. Okay, again, same thing. If you look at the origin of this rally, it's right here. And this one also, we had to get through some supply to get price to go higher. That makes this a stronger level. It's kind of becoming a theme of this session. If you haven't been focused on that or aware of that little subtlety or, you know, concept, it's important. We've worked our way through this. Here's your rally-based drop, supply above, and then your target would be just before that. So we'd want to buy in a retracement. This one looks like it's a little far from current price, but you know, all this has happened in the last day. So, I mean, this rally over on the right. So it's you know, it's the currencies, right? They move. Okay, so we'll put a blue line right here. Right at 40 for our target. Okay. So again, you want to get out just before your opposing supply level. Remember, the reason we do that, we want to enter positions at supplier demand and then take profits just before the opposing supplier demand level. The reason for that for new people is, you know, at these levels, you know, demand is competition to buy, supply is competition to sell. So if we're selling to take profit on a long, we don't want to sell where there's competition to sell. We want to sell where there's competition to buy. Right? Leave a little bit for the next guy. You have a much easier time getting filled. Okay. The trading platform, this is just TradeStation. Anybody can use this. It's okay, it's pretty good. I mean, for charts, it's great. Well, the whole white space comment is, for kind of the high level talk on that is, number one, people are visual. Number two, people, read all the trading information education out there. And what all these things do is they lead people to focus on the candles. They're colorful. Everything is about the candles, right? And forget the candles for a minute. Everything is about the price action. Well, every single trading book ever written, every single piece of I don't know every single, but almost every piece of information on the internet about trading, it's all about analyzing the price action, right? The trading and the price action. Either the candles on your screen or the bars on your chart or the, any type of chart, volume charts, tick charts, point and figure charts, line charts. Does everybody understand that? It's all about focusing on that. Everything's about focusing on where price is traded at. Have you ever read anything or heard anything that talks about where prices didn't trade at or couldn't trade at? Nobody ever talks about that. But if you think about it, what's the only thing you should focus on, right? So, what causes prices to turn in markets? Is it filled orders or unfilled orders? Again, what causes prices to turn in markets? Is it filled orders or unfilled? Yeah, it's unfilled orders. You get that 1FX? Does that make sense? Unfilled buy or sell orders is the only thing that causes prices to turn in a market. But what does every chart on the planet represent? Filled orders or unfilled orders? You see what I'm saying? Okay. It's filled orders. All this charting that you see and all the charting education you read has you focusing on filled orders and ignoring unfilled orders. But what you should really be focused on is, the only thing that matters is, where are the unfilled orders? And the reason why you have white space on the chart or areas where prices couldn't trade at is because supply and demand, that's the extreme supply demand imbalance. In other words, supply and demand is trades. Okay. All right, let's go on here. Oh, we talked about the long. Just because there's room above, it looks like there's more room above than there is below. We can plan on a short-term trade in the pound on the short side, I'm sure, but you're closer to larger time frame demand than you are to supply. But let's go to a smaller time frame. We'll find some levels. Okay, so to find our level, our short level, let's put a horizontal line at the high, and that line is simply just a reference point. So I'm going to scroll right. There we hit price. We don't see anything till quite a bit higher. Okay, and now we're going on one more time frame, and it looks like we'll have a level sitting right there. If you're trading the currency futures, like the pound futures, you'd probably be looking at volume charts or volume charts, and you'd see these levels much quicker. Okay, so here's 2 or 3 levels sitting on top of each other that you would never see just by looking at a larger time frame. You would never see them. So let's look here. And this upper one is really the one we would, well, I would actually combine these two on my account. Or I try to combine these two. That's kind of a bigger stop, but. And these levels are not that far away from current price. Okay, so there you go. Okay, so to find a shorting opportunity, we had to come down to a pretty small time frame. So again, I think the bigger picture play is that buying opportunity. All right, let's keep going. Here's the yen. So this is a really good one because obviously the yen has just been on a tear, right? And we recently broke out of remember last time or the time before that we were talking. We said wait for the yen to break out to a new high, and then let's look to take it lower from there. So we did break out to a new high, and it did fail. Now it's falling, but how do we get in on that? Wow, look at this demand, right? Price doesn't even slow down there. I guess it did a little bit, but that tells you that these levels are probably golden up here. We just need a little bit of a rally, not too much. We'd actually take our level just like that. Okay, so it's 124.40 to 124.75. So I would add about 5 pips for a stop there, and that should be okay. Remember, it looks big, but that's on a 4-hour chart. It's not a little short-term day trade. Okay. All right, there's that one. Let's see. Let's go to some of these markets. I know we had some great levels and opportunities this morning. Crude oil, I thought we did some stuff in crude oil. We did. So let's look at crude oil. We had a couple new levels in crude oil. Here we are. Yeah, Eugene, the difference in futures and Forex is there's really a central exchange with the futures. Your order is put in pretty much put into the Globex system. And so it's an electronic order matching system. You don't have your orders not going through, typically through brokers, typically not, on the other side of your trade, it's an order matching system. So what you're going to find is where you're going to have an easier time is when you do the short-term trading. As far as the longer-term stuff, I think you're fine either way. But on shorter-term trading, I think you'll find you have an easier time in the futures. All right, crude oil. Let me just find the levels that we used setup for this morning. Maybe we didn't put them in. Okay, let me just go to my list here. So we didn't hit either level yet, but there are really good ones in here. Let me point them out. I found these this morning. So 6280. Let me show you where that one came from. Let's see, where did that come from? Hang on a second. 6280. All right, let me go left here. Ah, yes. These two right here. So look at these levels over here. So again, that's, you really have two levels on top of each other. That's really, 62.50 all the way up to 63.25. That's not too bad. 75 cents. Crude oil. Of course, you got to rally to get there first. You're not that far away, given how much prices have been moving. So there's levels there, the 62.80 to 63. Then if we look below the 60.05, let's look at that. Okay, so there's kind of your drop base rally. It's all down here. There you'll see it. I'm sorry, hang on a second. Yeah, it's this one. My fault. I got a little confused there for a second. I'm looking at so many charts. So 60.05, that's clearly here on the, we'll see it on the 60. You'll see it on our other time frames too, but see how we're starting the level right there at the origin of that rally? Let's just make sure we're seeing here. 59.75. Okay. So we're about right there. Really nice level. We need a little bit of a pullback to get there, but this last rally's happened in a day, so that shouldn't be a problem if it comes down. Remember, we want to look for nice, when we're buying, we want to look for nice, healthy markets and just buy them at a discount. Okay. Okay, I think we're good there. Yeah, the equity markets are really flying. I'm seeing that. Haven't done anything here. Let's check out the S&P. Yeah, buy low, sell high. That's it, just like Buffett. The other market that had a really nice level was, in our session, was the DAX. Let's let these charts catch up. Okay, so notice the DAX is just now reaching some supply. This market looks great because again, you don't really have any significant demand below. You're just reaching the supply. In fact, you're not there yet, but almost. So if you trade the DAX, I would certainly watch this area. This is probably one of our best charts of the day, the 11,200, 11,20. Yeah, it's actually more like 11,195. Okay, so watch for that. If you look to the left, there's nothing till about 10,780. So plenty of room there. Again, no one's suggesting you should hold it that long. You certainly can if it works out. Nothing wrong with playing that move. I love doing that, but you want to know where the larger time frame opportunity is. Just helps your small time frame trading. Okay, now let's keep going. Yeah, Eugene, it's going to be, those are definitely the two main characteristics: buying after a rally in price and into a price level where supply exceeds demand. The other one is, for example, on this one, whoever is buying right now in this market is obviously buying after a big rally in price into a price level where the chart clearly shows that supply exceeds demand. What's the other big mistake they're making? What's the other big mistake that the buyer's making here? And again, you start to add these up, and you can see why people's performance is so different. Yeah, they're doing all that in the context of a downtrend. So they're buying after a rallying price, they're buying into a price level where supply exceeds demand, and they're doing all of that in the context of a downtrend. Only someone who really doesn't know what they're doing would take that novice action. And if you're a seller of whatever market you're looking at, your job is to get people to pay prices that are too high. But you need to know what too high means and what too high looks like. Okay. All right. Let's look at another market. Again, I can look at any market you want. Let's look at DAX. Yeah, let me go back there for a second. Okay. So again, we start here. As far as a profit target goes, right now we have this, but we could do better. So let me just put this in, and then we'll come to a smaller time frame. Okay, so there's our opportunity. But now we want to go down to a smaller time frame and see what's inside this green candle. Where are the buy orders? And let's do that on a much smaller time frame. Okay, so all you have inside there is this stuff right in here. So if I just put a blue line, so I want to get out, we want to get out above that. So risk reward here is not going to be great, but okay, so that blue line would be a very attainable target that pays you a little more than 1-to-1, but doesn't look like it's offering you 2-to-1. Price could go through those, the demand level down there, but just below the blue line. But you're probably going to get a nice bounce out of that. Okay. Any questions on that one? And again, this is the DAX, so just be careful if you don't trade the DAX. I wouldn't just jump in and start trading the DAX. Just that larger time frame, Oscar, and I wouldn't get too mechanical around trend, and I wouldn't really focus on trend. I just wanted to bring it up for that example. And again, for just kind of newer people that are just starting to get the hang of this. But once you really get the whole supply-demand concept and being able to identify supply and demand levels, the word trend is just going to drift away from your vocabulary. Right? Okay, let's keep going. Okay, what's wrong with this chart over here? I was waiting for this to come up, but it's not. Here's the euro. Real quick look at this larger time frame. Actually, not that one. I want to look at this one. Okay, so we can see why the euro is getting hung up here. If you look to the left, we've come into some really nice supply zones here. What's nice with the euro is there is some room to the downside. You now have some room to the upside as well, but you know the upside is capped because of the supply sitting up there. So if we take this down, time frame or two. Yeah, you have a couple nice demand zones below. Let's see if we can. We just missed this one. Perfect little supply setup about 10 minutes ago, but you know, we weren't there to see it or take it. Okay. Very nice supply zone here. Rally back. Okay, small time frames. You have a buying opportunity at about 112.45. And, you know, I would probably take another short at this 129.80. Price just barely touched that zone. Yeah, but there's levels that come up a little before that also. Eugene. Yeah. Yeah, it's okay. Yeah, you want to go to small time frames and look for levels coming out of this rally-based drop, but you're already in a small. Would be careful with that one. I don't think 136 looks that great. If it was that great, how was price able to trade up to 138.50 when it was there? Does that make sense? So if there were so many sell orders at 136, you wouldn't trade all the way up to 138 and change, right? Yeah. Remember, just focus on the buy and sell orders and what that picture looks like on the chart. That's what helps determine where prices move, and that's what helps determine where prices turn. You get those things figured, two things figured out. Part of that is, discipline is key. Well, that's why just set and forget your orders. You know what I mean? That's the key. There's my email address, seiden@tradingacademy.com. If you have any questions or comments, certainly shoot me an email. We're going to start changing up these sessions a little bit coming up soon. So you'll hear more about that in the near future. And have a great day. Hopefully this was helpful, everyone. See you soon.